Bitcoin is crashing. Are you surprised? You should not. You should not if you are following this channel for a while, because if you do, you know about the backtest that I make here. You know about the best moving average historically. We are below the best moving average for Bitcoin, the 124 day. Now, a quick recap. This is what that backtest stimulates to return in the past, right? So this is a linear scale. This is the backtest result. Here in white, we see the Bitcoin price. And we've got the same here on a logarithmic chart, right? So this is part of the 2018 crypto winter in it. And then the whole reversal from 3K to 69K. Then a bit of recovery after the Terra Luna collapse and the FTX collapse. This outperforms pretty nicely. And the idea is you want to be in Bitcoin whenever the price is above the moving average, and you want to be out of Bitcoin, or rather even betting on falling prices when moving average is above the price, right? So we go with the trend. We bet on falling prices here and we bet on rising prices here, and we have just crossed bearish again. We should be betting on falling prices. Now this is the 124 day, right? And we could draw all kinds of different moving average durations, right? We could take the 150 or we could take the 100 day, then it's closer to the price. We could take the, say, 80 day, right? Why do we take 124? What is this all about? So that's why we do the backtest. We try to find out, at least historically, how long is on average the reaction time whenever a trend turns around. Bitcoin is cyclical. We do have our waves and we can try to figure out, okay, how many years before the halving should we buy, and should we buy maybe relative to how much it dropped from the all-time high? There are all kinds of approaches. What I like to use is quantifiable approaches. So things that can be tested and measured regarding its performance in the past. And so this moving average strategy is pretty good because we can optimize. We can find out what duration here is actually the best. And how well does this approach in general work? Would the 50-day still in general create useful signals? And here's a summary of these back tests. Okay, so we've got here on the x-axis the duration of the moving average in days, and on the y-axis the annualized performance. Now annualized performance because we start the data set in 2017, August of 2017. And so how much compounded year by year would the trading strategy bring us? And what's nice about this is that in general, this tends to outperform buying and holding. So buying and holding over the period would have given us only 19% per annum. But we could have taken the 50-day and we would still outperform. We would go at 64% per annum. Still way better. So as long as you don't take too short of a duration, right? As long as you go above, say, the 26-day, you should be better than buying and holding, even if you include trading fees. So in this case, we included fees of 0.2% for each buy and sell. And so say when you swap from long to short, you would have two transactions, right? First, you would close the long position, and then you would open the short position to bet on falling prices. So in general, when this directional change happens, we actually have 0.4% even. So 2 times that fee that's set over here. But even after those fees, we see a nice outperformance for most of the moving averages. And the best annualized performance is here at the 124 day. You can go slightly lower, so up to 110 day. But yeah, this range of moving averages seems to be the best. And this kind of effect can also be seen with other cryptocurrencies. So for most cryptocurrencies, using this approach, trading according to the moving averages outperforms buying and holding for 80 to 90% of cryptocurrencies. Now we don't have this for stocks. So the stock market seems to be efficient enough to anticipate these shifts. There are enough quant traders in stocks, a lot of people that do automated trading. Crypto is less efficient, and that's why a relatively simple approach, such as just following the moving averages, already works pretty well. And so here we are today below the 124 day, which is currently at 26,550 roughly. So if we don't suddenly climb by 5.5% or so, right, and we close a day above this, we would still continue to be bearish. This is a pretty strong signal, and I personally take this very seriously. I talk about these signals regularly in the premium membership. So Every 2 to 3 days there is a specific dedicated premium video, so feel free to check that out. The link is also in the video description. For now, it's time to be rather risk off, not only in altcoins, but even in Bitcoin.